very warm welcome to all of you. We are so excited to see you here. So I'm Lomesh. I'm the Vice President of Growth at the DFINITY Foundation. Today is a super interesting and exciting day in the sense that we have convergence of two events that actually is happening in our headquarters today. So we have a ICP.Lab Gaming and Metaverse event, which is a projects that are building on the Internet Computer Protocol, as well as we have the Web3 Festival, which is co-hosted by the ICP Foundation, INACTA Ventures, Crypto Oasis, and Crypto Valley. So if some of you were there in Zug yesterday, I hope you enjoyed the NFT festival yesterday. So as you're aware, Crypto Valley has been operational for 10 plus years in Switzerland, and pretty much formed the basis of like how an ecosystem or community could be developed in Switzerland was like a real blueprint of how they set it up. They took that to Dubai. I had a pleasure along with our founder Dom to be in Dubai recently at the Crypto Oasis event where Ralf and Dom had a panel, and was like very exciting. So what, picking up from what Ralf was mentioning yesterday, was like Switzerland was all about like basically setting up the framework, the blueprint on how that was established. And in Ralf's words, Dubai is where basically things started to see infrastructure and scale. Now, taking that segue into the infrastructure and scale aspect, for all those who are uninitiated, so we DFINITY are a major contributor to the most scalable infrastructure on which you can build software completely on chain. So DFINITY Foundation is a contributor to the Internet Computer Protocol. So what is ICP, the Internet Computer Protocol, and how it's super different than anything that you have imagined? So let's take the example of a simple NFT that you saw at a festival yesterday, or what we were talking about. So a typical blockchain is only able to store very basic information. So let's say I transferred some tokens to Dom, or I transferred an NFT to Dom, and a blockchain simply contains a ledger which says tokens from Lomesh went to Dom, or this NFT. URL is the thing that lives on the ledger. The actual real asset, the JPEG, the video, it doesn't live on chain. So imagine like, so we have this gaming and metaverse presenters today that you'll be talking to. So imagine when people are saying things like, this game is built on chain. What does that even mean? So it means that you have this ledger, which basically tracks some tokens in the game, while the game itself is running on a cloud somewhere, maybe an AWS or a Google Cloud. What that also means is let's say if I'm a game developer, that means my credit card is associated with that AWS account. As soon as I pull my credit card away, yes, you will have those tokens on the blockchain, but the game would disappear. So this is not how a trustless computer, a trustless game should work. So this is the fundamental problem that we are trying to solve here with the internet computer. So our vision is essentially blockchain singularity. What that means is that we envision every form of software that humanity can develop could be run in a completely trustless way, 100% on chain. So if you're talking about a social network, all the user data, all the assets, if you're talking about a game, all the gameplay, game assets, everything should be living completely on the blockchain and served from the blockchain. So that's the vision we are realizing today. And today what you will see is like, you'll of course hear from, we'll have a set of 3 panels, and then you'll also hear pitches from the ICP.Lab teams. These are the startups that are building some gaming and metaverse projects on the internet computer. So with that, would like to welcome you all again. A big round of applause. Thanks for being here. And so we'd like to invite our founder, Dom, as well as Ralf, who is the founder of INACTA Ventures and Crypto Oasis, for a fireside chat.
So I got a hard job today because always when I talk with Dom, I get the first 30 seconds and then he's taking over. So no, but what is important for today, we're proud to host this Web3 Fest the first time together here in Switzerland. We're going to do it next year again. And we dedicate every day for a special topic. Yesterday we had NFT and art. And today we are talking about gaming and metaverse. And me personally, I think gaming and metaverse could be a tipping point to get 1 billion users on the blockchain. And when you want to get 1 billion users on the blockchain, you have to solve something what is called scalability. And when I look into all the layer ones, where many of those are headquartered in Switzerland, there are probably not a lot who can do that. And I think this is the first point where I would like to hand over to you, Dom. What's your opinion on that?
Well, I think, I mean, this is a good point to start with because, there's a lot of noise about Web3. And Web3 is written W-E-B-3 together. And a lot of people are unaware what it really means. So Web3 really means that you build services like social media and games and metaverse on Web 2, on Web 2.0, written Web space 2.0, right? And Web 2.0 infrastructure is things like, cloud computing services, i.e. Amazon Web Services, databases, web servers, Memcached, Kubernetes, all that stuff. And you build your social network, you build your game, you build your metaverse on Web 2. And then the idea is that you sort of give people ownership by keeping some tokens on a blockchain and some NFTs on a blockchain. Even the content the NFT references isn't on the blockchain. And then, there's a little bit of logic involved in some very simple smart contracts. And, during gameplay, say, occasionally you'll be presented with the opportunity to buy an NFT, and then you'll interact with this blockchain using a wallet like Metaverse. Sorry, excuse me, MetaMask. And which essentially actually pretty centralized in nature, comes off Chrome Web Store and is backed itself by Amazon Web Services. And, you do a transaction and you own the NFT, and maybe that grants you some right within the game and so on and so forth. But I think most people, within crypto are completely unaware that, in this prevailing paradigm, all the user data, all the compute, the user experience is on Web 2 infrastructure. It is Web 2, and it's just Web 2 with a sort of token and NFT functionality grafted on. And we believe that doesn't really fulfill that much of a purpose. There are a lot of problems with it. I think Lamesh was alluding to some of them. Very obviously, these users are creating content and relationships within these environments. And all of that lives within a database on Amazon Web Services. Amazon Web Services could switch it off. A hacker could get into the account and do things with it. A developer could get it. Look, the developers have the username and password, right? They can log in and arbitrarily change, delete, do whatever they like, user content, change the functionality. And indeed, they could subtly change the user experience to, induce users to send their tokens to a hacker and so on. So, the misconception has come about through blockchain marketing language, which is, built on Ethereum, built on Solana, built on Polygon, built on Near, all of this. And, we've done surveys and crypto journalists almost universally unaware. So I had a recent conversation with a very senior crypto editor, and I was trying to explain what the internet computer did. And I said, look, the purpose of the internet computer is to create a blockchain that extends the internet with kind of a new kind of cloud functionality, where you can build anything at all with smart contracts. And, all the data and functionality lives on the blockchain itself, and the smart contracts are even serving the user experience. And he said, well, how's that any different? Ethereum and Solana are decentralized clouds. And this was a very senior editor, I would say, here of a crypto major publication. And, you know, that's not the exception, that's the rule. Like journalists, investors, Web2 developers looking in actually believe, you know, in the vast majority, by which I mean certainly in excess of 95%, probably more like 99.5%, that built on blockchain XYZ means that. They have no idea that it means built on Amazon Web Services and just a few tokens on. So there's a problem with that, and there are a lot of problems with that architecture. So at DFINITY, we're trying to beginning to draw this distinction between Web3, which is, you know, WEB3, and Web 3.0. And we believe in Web 3.0. Web 3.0 is full stack decentralization, where people build everything on a blockchain, you know, and none of this stuff is under the direct control of Amazon Web Services, developers, hackers, whoever, and that the same kind of useful properties that, you know, Bitcoin introduced for tokens can find their ways into, you know, major mass market services in areas such as the metaverse and gaming. And that's the real game changer, and that's where we're going. It's something much more profound than just tokens and NFTs. But I think at the moment, there's not much awareness. People are still laboring, you know, under this misapprehension that Web3 means something very different. It means that things are running on the blockchain. It doesn't mean that at all. It means running on Web 2 and just.
So it's the first time for me that I hear the difference between Web 3 and Web 3.0. By the way, this is your definition, or
it's my definition. Look, I think it's logical because, you know, Web 2.0, you know, really had a meaning with respect to the kind of services that were being created. It also sort of, you know, came about at the same time that you know, cloud infrastructure was coming into mainstream usage, and cloud infrastructure made it much easier for startups to, you know, build services and scale them than it had been before, and you know, drove that. It really was, you know, a large part of the explosion in the kind of services that we saw. But I think, you know, there's legacy IT and Web 2.0. I mean, legacy IT is kind of like cloud services and databases and web servers and all that stuff, and Kubernetes and whatever else. And Web 2 is really, you know, the things that were built in the public domain on that legacy IT infrastructure. But, you know, there's you can't really separate them perfectly. But Web 3.0, I think, is, you know, about the reinvention of the web in a fully decentralized form, in which, you know, systems and services are built on the internet itself, and ultimately oftentimes begin to run as protocols autonomously, typically under the control of DAOs. And that's, you know, that's how you unlock these kind of really profound advantages that I think the internet can provide.
So when I take it from here, Web 3.0, my respect, because you are solving not only the trilemma, what we're talking about, you're also solving the computing power below the AWS, Google Cloud, whatever it is. So now competitors probably say, okay, let's put it in 5 different clouds and I don't have a risk. Let's keep that out, because I know this discussion alone goes a long way. But more interesting on that side for me is, how do we get people really using what you guys created, what others are creating? Because at the moment, in the metaverse, it's quite lonely what we have been reading before.
Yeah, look, I think the you know, the crypto space is due for a huge shakedown. I mean, 99% of stuff is sadly junk, and it came to work in a very specific way where people would just spin up these blockchains, which were essentially token databases. Oftentimes now a proof of stake running on Amazon Web Services themselves. They're not really sovereign networks because, in principle, like, you know, a couple of big clouds can switch them off. And you know, then you've created this blockchain, and you create some narrative around it, and then there's this whole kind of multi-level marketing thing where, you know, you get the buy-in of some major players, and you've got all these venture capitalists behind you, and then you raise this money and you invest all this money into the ecosystem, and then that creates these announcements that creates a kind of flywheel, and that flywheel draws in more investment. So it's a subtle form of multi-level marketing. Flywheels always stop eventually; they run out, and I think the froth we've seen in blockchain is going to eventually sort of diminish quite dramatically. I mean, we're not going to see major chains advertising on America Cups yachts and sponsoring Manchester United and the leading Formula E team and all that kind of stuff. That was really a symptom of something akin to .com. And, we're now in the .com crash phase. And, I think when the tide goes out, people will see a lot of people haven't got any clothes. I mean, imagine the situation. I mean, we've done surveys of the crypto press and investors, like retail and institutional investors, and nobody seems to understand what Web3 is. Like, people actually believe these systems and services are being built on blockchains. They have no idea that they're all being built on the cloud. And so, first of all, that kind of system, which ultimately was controlled by people like Sam Bankman-Fried, right? Let's not forget, and Barry Silver. And, there were these huge amounts of money flying around, and crypto warlords, so to speak, would create these complex hidden economic arrangements. They controlled the crypto press. That meant that you never really got proper dissemination of signal
let's take this from the other side. I still get invitations to the Formula One. So still some companies are sponsoring there in our space. And when we take it from the positive side, I would like to compare the internet computer with Dubai. You know why? The guys built an amazing infrastructure, and it works only out when people are coming there, flying there as tourists, working there, using the infrastructure. What is the incentive to come to Dubai? It's a safe environment, security, scalability. You can hire people as fast as you want, and throughput. They have some problems with the streets at the moment and with the traffic jam over there, but they are able to scale that. So UAE built an infrastructure, and their target is to grow all 10 years, double the size. That's a little bit slow for the tech world, but that's quite fast for the real world. So what do you think is the next topic which can make the internet computer users grow all 2 weeks and not all 10 years?
I think there'll be amazing growth. Look, we're in this kind of like something even more extreme than a traditional crypto winter right now. It's very akin to the .com crash. In the end, that was a good thing. And if you look at most of the internet giants that are around today, they largely, built their technology and services and after the crash. And in the midst of the crash, I mean, Amazon, for example, I think Amazon stock went down to $3, even though they were capitalized with billions of dollars and had a fantastic business plan, and they were executing very well and growing and so on. So, in the crash, everything just goes down, but it shakes out the industry, and you're left with people who are really building real things and have viable game plans and so on. So, it's important that the industry goes through this phase. And I think the things that are being built today, from the things that are being built today, will emerge like the future winners. So, I think that we'll see, within the next year or two, fully decentralized Web 3.0 games with millions of users, social networks and metaverses with millions of users. And we'll also see enterprises beginning, to build on cyberspace. Cyberspace is cloud. But I think we're going to see the results of this probably, hopefully, beginning next year, I'd imagine. But right now, Web3 is in Web3, Web 3.0, the industry, whatever you want to call it, blockchain, crypto, is going through a sort of necessary correction. And there's still a lot of stuff to go. Like, I mean, there's still a situation where, you know, you've got all these just kind of like blockchain networks that people misunderstand and believe in for tribal reasons or because they're in tokens, and they don't really even understand what these things do. And the modus operandi is that you market a narrative, and the narrative, you know, you lean into that narrative and you get the, you know, you drive the price of the token, these kind of flywheels where, you know, you get the venture capitalists coming in, you raise money, you sell the token, you reinvest that in the ecosystem, you make all these announcements, the price, more people buy the token, and you just keep going like that. That kind of thing, I mean, flywheels to some extent are a natural part of business, and there's nothing necessarily wrong with that. But the manifestation within crypto is probably not going to go anywhere good in its current form. So the industry needs to consolidate. It needs to rally around real technology and start thinking about utility rather than token price. The crypto press needs to somehow get in a better place where, you know, people writing about things actually understand better what's actually happening with the things they're reporting on and what they actually represent and how they work, so that people have more signal. And I think developers also have to, you know, stop being so mercenary. And it's certainly the case today that the majority of Web3 developers, you know, now build on chains in order to get oftentimes like very large grants or venture capital investments that are related to these flywheels. So, you know, if you look at what that means, it's that people will, you know, developers are building things not because of the, you know, the theory about how they're going to add value to their end users. That doesn't matter at all. They're choosing to build on flywheels where they get all this funding. So, you know, you can't have a market that succeeds or an industry that succeeds where people aren't thinking about the value they're creating. They're instead thinking about the money they're getting from flywheels. And those flywheels are supported by, you know, tentacles most people are completely unaware of that reach into the crypto press and direct what gets reported on, how it's reported on, bots on social media, market manipulation.
You know, I think we have two things. We have on one side the story about the crypto press and everything, and this is a closed group. On the other side, I think we need to open up and bring this to a mass market outside of the crypto press.
Yeah.
I see Brett Krause sitting here. He will talk later on about normal gaming. And when we look into the gaming market, it's the biggest market in the world before the movie industry and so on. And there we are not talking about, what is technology and so on. So it's what does the user see?
Well, that's right.
Yeah.
So that's
we need to get to this side.
Right. So, I mean, you know, if you ask people today, and we'll get to what does, I think will work, but if you ask people today, like what is it that you're offering? Why is your game, your Web3 game going to be better? You'll get answers like, well, you can grind away and you can earn money, right? And we know how that is, right? It's just, again, a kind of Ponzonomics flywheel that collapses. Or it's like, if you play this game, you can actually own your suit of armor because you can buy the NFT. And, you know, these answers are just empty and vacuous. Like, that's not going to work. I mean, I've created a computer game. The last thing I did actually before getting into crypto is, I'm not a games guy, but the last thing I did was I created a computer game. I've only created one game. It was called Fight My Monster. It grew to about 3 million users. And, you know, creating games that get even a handful of users is very difficult. It's very competitive. And the users care about the experience. And while you might get some speculators playing because they think their NFT is going to go up in value, that's not how, you know, games are going to be able to, Web 3.0 games are going to be able to take over the world. So I think, you know, to really understand how to succeed on a massive scale with a mass, you know, and to win over the mass market, we have to think about, you know, the fundamentals of why the internet, for example, was so successful versus, you know, proposed private networks like the information superhighway that Microsoft and Oracle wanted to build. And essentially, you know, the internet, because it's a decentralized network, created a kind of free market and gave people some kind of autonomy within that. Like, everybody can access the internet. at the most basic level, like if I created a website, you created a competing website, I couldn't phone up the owner of the internet and say, hey, I'll give you some stock in my company if you slow down Ralph's website. So it created this kind of free market where everybody had this guarantee that they could connect to the internet, that they could create a service that would be available via the internet. So, you know, Web 3.0, you know, moves beyond just having a decentralized network that connects everybody and everything to a world where users get some other kind of guarantees with respect to the actual systems they're using. And people can build systems on the internet itself. And they can be sure that they're not going to be disadvantaged, for example, by somebody phoning up the owner of the internet computer or something like that. So if you think about you know, a metaverse, like there are two things that future metaverses are going to need, and I think metaverse and games are going to blend to an enormous degree. But the two things you're going to need are users who are engaged in creating content and interacting with other users and making this whole thing work, and AI. So AI is going to be absolutely fundamental. But talking about users for a moment, and because at the end of the day, like, you have to have users that know value, right? You know, if you create, if you want to ask someone to actually build something in the metaverse, really invest significant effort building it out, you want to give them some kind of guarantees that what they're doing is within an environment that will persist, that is updated with fairly, and if they're actually trying to monetize it in some way, that they're not going to, you know, be disadvantaged relative to other users and so on. So I give, as an example, I talk about, you know, something like, I remember Cubetopia. I don't know what they even do, those guys. It was an early project. I remember having a conversation with them. Cubetopia's original idea, I don't know what it is that you create like these individual islands. Everyone can create their own island. It's a kind of Minecraft-esque world. And the idea is you can have your own unique URL and you could put it on your Twitter profile. Someone will click on this URL and bingo, you're in, the web browser opens up and you're inside this person's personal area of island, metaverse island, right? Now, first of all, you know, just psychologically speaking, you know, if you're a user and Cubetopia, say, or whatever it would be, could work for any metaverse, runs as a protocol, well, you're getting some kind of, just the fact that you're building this island, this metaverse out, is a different kind of exercise. You're not building it within Minecraft, for example, which is owned by Microsoft. You're building on a protocol that's decentralized. It's yours. And even in as much as it might be controlled by a DAO, you know, there's a level of ownership you're getting there that you cannot possibly get if you're building on within a centralized game. The next thing, of course, is that these metaverses, because they're not, you know, essentially just existing within a system run by a company, can create, you know, economies and ecosystems. And an economy and ecosystem is much more powerful than something within a walled garden. Because people can participate as independent actors in the same way that, you know, if you and I build websites, right, we can put them on the internet and no one can stop us. And if we're competing, I can't call up the owner of the internet and say, slow down, I'll give you some stock in my company if you slow down Ralph's website. So, you know, some of those same kind of advantages, you know, can also be given to people building out the metaverse. Some sense of ownership, autonomy, and guarantees that, you know, this thing just won't be arbitrarily taken away from them, and that they've got some kind of real ownership. Because once you've got a metaverse that runs as a protocol, by which I mean that it's autonomous, you know, the code is really just running as a blockchain extension in a sense, and is updated maybe by a DAO. Well, now you can, you know, really go to work with sophisticated tokenization, which can lay the groundworks for economies that cause the environments to be built out faster and become much richer. And I think like NFTs, of course, are going to play a role in these future metaverses. But I think we're going to see much more sophisticated forms of monetization. So, you know, let's say, you know, you've created your island. Okay, so there's some people somewhere that, create NFTs, like there's the castle NFT. And if you buy the castle NFT, you can now put the castle on your island. You didn't have to build it yourself. Well, that's fantastic. Great. But how might the economy work? Okay, well, let's say, I'm an influencer on social media and I create my own island in the metaverse and I make it fun. I put some games in there and it's a nice environment. I've got different things to explore like the castle and so on and so forth. And I end up, and maybe I spend some time in the metaverse myself, talking to people. Through one thing and another, I end up with a lot of footfall, a lot of people within my metaverse that I built. So how can I monetize that? Well, for example, you can imagine an NFT that's a teleporter, right? And let's say, there's somebody that creates an island where, there are slot machines, right? Blockchain-based slot machines. A casino island. And they want to get users into their casino island. Now, the influencer who's created an island that's got a lot of footfall, he can or she can sell NFTs that are teleporters and put these maybe there's like 10 teleporters, 10 teleporter NFTs. And if you buy this teleporter NFT, it works for like a month or something like that. And, you place these around the island. And now the casino says, right, I want some footfall. I'll buy the teleporter NFT on your island in order that people, the people wandering around your island.
So a decentralized advertisement strategy at the end of the day. But
it's like it's a network. So the metaverse can become a network in the same way the internet's a network. And if you look at the way the internet works, it's got monetization works by way of peering. So if you create an internet subnet at home, right? You install your Wi-Fi router at home. Okay, you've created a subnet in your own house, but it's not part of the internet. What do? You pay your ISP, like Swisscom here in Zurich probably, to peer with their subnet. So now you get a fiber optic cable from Swisscom and you plug it into the back of your home router. And now your home subnet is peered with the Swisscom subnet, and you pay them for that relationship. They themselves are paying for peering relationships with Global Crossing, Cogent, Level 3, and so on. Those backbone providers are paying for peering relationships with people who run cables under the ocean and things like that.
But this is the back-end infrastructure. Usually, Web2 companies are making a lot of money on the front with the user. Who owns the user makes money. And here I have the big question mark with protocols. Because I can choose whatever protocol I want. Do I really need the full stack on the back end, or do I put it on a layer 2 on the Ethereum blockchain because it's even cheaper probably? I know your answer, but you know what I want to tell about. How do we change the monetization model coming back from who the user owns to getting it in the full infrastructure?
I mean, just first of all, I mean, it wouldn't be possible to build this with Ethereum, but just say that you created some model where, people were creating metaverses on Amazon Web Services, and then there was some kind of tokens that you could, move around using MetaMask or something. I mean, look, what kind of guarantees do people get who are building these metaverse islands? The developers have got username and password, and they can just log in and access the database and arbitrarily modify what you've built. And if their credit card expires, and let's say they got banged on the head and they were in hospital, say, and forgot to renew the credit card, literally the entire Amazon Web Services account will go offline and the data will disappear in a puff of smoke. Like, that's not a good foundation for people wanting to build out metaverses and, maybe even invest years of their time, for example, developing the metaverse islands so that eventually they can sell peering relationships to other islands via, teleporter NFTs and things like that. So, in order to have people really investing in these things, not because there's some kind of short-term play to earn dynamic or they're being funded, in order for people to really want to do this and to create a decentralized economy, an ecosystem, which is much, much more powerful than something that just runs within a walled garden, closed private infrastructure, need first of all to make sure that the foundations are also decentralized and can't just be arbitrarily modified by a developer, albeit, of course, if you have DAO updating it, there might be software updates, but it's a different thing.
I think I have to take it from here because I see the guys over there putting on the watch already. I mean, we have the big pleasure to have you tomorrow at our Green Block event. We have you on Friday in Zug and Saturday at the 5 Hotel. I think we will make sure that we continue this story. I will sum it up with, we need a sustainable backend infrastructure, which is able to incentivize different people and not switched off by single groups of power at the end of the day.
Yeah, I think so. I mean, look, it's not just the backend infrastructure. It's this idea that you can actually own what you're building in the metaverse because it's not run by an individual company. And there's no username and password that someone can get in on the back end to change things. That if someone's credit card expires and they, forget to put a new one in, it doesn't all just disappear in a puff of smoke. And moreover, that the thing runs like a protocol, like the internet itself, where there's a level of fairness that can be expected, and a tokenized economy, an ecosystem can form, which provides people with a level of economic freedom and guarantees, just like the internet did, with respect to, for example, simple websites. It's really all about just taking what the internet did for networking and applying it to the platform and the foundations of these things that are being built. That's what Web3 is about. And in the end, it's going to unlock richer experiences because there'll be more people building and contributing. In the same way, the internet allowed anybody, look, think of this. The internet grew so quickly because anybody could be an ISP, right? Anybody could set up an ISP. All you have to do is set up an ISP. You've got a subnet or subnets. You pay to peer it with some other backbone providers or other ISPs, and then you start selling it to users who want to peer. The thing grew because there was no central control and anybody could extend it. That's how to create a metaverse that can also expand very quickly and draw in a huge number of users and create, foster innovation and creativity and economic growth and create much richer experiences than centralized metaverses can.
I think we stop it here, and we will hear more about the applications on top of it later on and startups on top of it. Thanks, Dom.
Thanks, Ralf.
Good up.